Good evening, folks. This is Andy Pedraza with Special Effects Academy, and we're on the May 23rd start of the week session in the Forex trading room. We will be going through our standard agenda, look at the prior week's results, our currency strength meter for the week, any fundamental announcements scheduled, look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Let's kick off with our ledgers. Long-term ledger, no significant change. I think we're down a sliver basically on holding cost, what's shown as swap on the next to last column on the right. Simply the cost of holding trades open. So we're down maybe 1/3% or something like that on just accumulating swap cost. I don't think we closed anything out this week, though we did open a couple of new trades. Actually 3 new trades, Pound Aussie Long, which was a re-entry, and USDJPY and USDCAD short, taking advantage of perceived dollar weakness. This is the long-term account, so we expect to have these trades open well until they either produce or hit our stop losses, so no rush there. This account is looking quite healthy. We're still pretty close to the beginning of our fiscal year. We're already up beyond 10%, so that's definitely a good start. On the intermediate, not as good a start. We're a little bit better than break even. We did open 5 trades this week, Pound Swiss, USD Swiss, Euro Dollar, Pound Dollar, Euro New Zealand, different directions. Mainly towards the end of the week. We didn't do much towards the beginning. I think we had 1 trade close out at a small profit, if that, and that was pretty much it for this account, or that might have been the long term, either or. No significant change for the week. And the same can be said for the short-term ledger. Indeed, the trade that is currently open has been open since the 10th of May. So we're still hanging on to that trade, waiting for it to either produce or kick us out. That is your update on the 3 ledgers. Notes and opportunities for improvement. It was mainly a sideways week, though trending and some breakouts are still ongoing, depending what currency pairs you look at. The US dollar was mainly flat. The big losers were the Aussie and the Kiwi. The other currencies actually showed gains, as we'll see in a chart coming up. There was, though, a lot of back and forth throughout the week, making it a bumpy ride. That means that some of the currencies actually made significant moves, but then came back to where they had started out. So if you were in these trades, you might have had a bit of luck, maybe some profit, or a bit of bad luck, maybe some loss. But ultimately, at the end of the week, things weren't that much changed. Looking at the relative strength meter, we can see a graphic representation of what I was saying. So we had the Kiwi and the Aussie being the main losers. The dollar also lost, but a very small amount, ultimately sideways. However, the other 5 currencies showed significant gains, all of them above the 2 mark. And that would have been the biggest one, the Swiss, followed by the Canadian dollars, definitely gaining strength. Then the JPY and the pound pretty much evenly matched, and the lowest gain was the euro, but still a significant gain for all of these currencies, even the euro, which was the straggler. And nothing compared to the losses on the Kiwi or the Aussie. Those were definitely bigger than any wins in the other 5 currencies that we're looking at. And of course, the dollar pretty much flat. Fundamental announcements scheduled. We've got quite a few, starting tomorrow night with Bank of Japan's Governor Kuroda-san's speech. We won't be trading that one live. First off, they don't seem to be sticking to a schedule these days, and I don't expect there to be any surprises in said speech. On Tuesday evening, late evening, we have the Reserve Bank of New Zealand's interest rate decision that will be happening around 10 p.m. U.S. Eastern time. So we will be shifting our evening session to a later time to accommodate for that. And the RBNZ is also publishing a rate statement, a monetary policy statement, and an hour later is doing a press conference. We will only be trading the main event, the interest rate decision. Then we have GDPs coming out of the US on Thursday and durable good orders also out of the US at the same time. We will not be trading those. So the only event we'll be trading live will be the interest rate decision out of New Zealand. With that, we jump into the charts. Commodities, oil continues very close to its one-year high. It did retrace slightly this past week, but not anything breaking support at all. It's still in an uptick and ended the week trying to make it back up. Obviously, all these trends are done when they're done. So we have to be aware of that and make sure we're not caught on the wrong side. We do not trade oil directly. You could, but we don't. But we do trade the Canadian dollar, and it is heavily correlated with oil. And that's why the Canadian dollar has been gaining so much in the past few months. Looking at the major pairs, the euro dollar had a bumpy ride, and you can see what I was saying before about bumpy rides. It went up one day, down the next, up the following, down the next. It ended the week higher than where it began, but it was definitely a nail biter of a ride for anybody who would have been trading it. It was going up and down by about 100 pips at a time. And while it didn't move much, if you had some very tight stop losses, you could have been taken out in both directions very easily. Hopefully you didn't. We are trading this one up at this time, so we're just hanging on and waiting for the bigger move. I dislike tight stop losses precisely for this reason. It's very easy to get taken out in a sideways market, even if ultimately you were right. The pound dollar, also a bit of a bumpy ride, moving in all directions, ending the week pretty close to where it started and aimed in that direction, trying to go down after bouncing off of resistance at the very top of the chart. I still see this as a good opportunity for a bullish breakout. That means it's going to break the top and keep going, but of course we have to wait for that to actually happen. USDJPY was steadily going down most of the week. It had a bumpy ride as well. I mean, you can see that it went down one day, up the next, but ultimately it ended lower every other day. And it does end the week significantly lower than where it started, sitting right on top of the support afforded by that trend line. We are waiting for a break of that trend line and a trip towards the bottom. We firmly believe that the dollar is going to weaken significantly in months to come. And it doesn't matter if the yen weakens at the same time as it pretty much has been doing, except last week. It had some gains. But the important thing is that we think the dollar is going to weaken a lot more than any other currency. So even if both dollar and yen weaken, this chart should still start looking for the bottom. USDCAD, of course, the Canadian is riding on the back of the oil surge, and that is giving strength to the Canadian dollar to a significant degree. It has broken the bottom of the chart 3 times now and counting. So we're having lower lows every time it does one of these breaks, and it has been sitting on this level of support at the 120.5 for a couple of weeks at least, and we're waiting for that break to take us lower. This is another one we're trading in the down direction, primarily because of what I just said, dollar weakness, but also Canadian strength. So this one will be a double whammy if things pick up. The dollar weakens and the Canadian strengthens. This one will fall like a rock. USD Swiss also breaking support in the midst of doing that right now. We're looking for a trip towards the bottom again on dollar weakness. It's moving away from this support level. It's respected for quite a while and has been quite a decent move towards the bottom. So that's good. So we'll be trading that as well. Aussie dollar going sideways, and this is as a result of both Aussie and dollar weakness. So we have 2 weak currencies playing against each other. Weak against weak is going to go sideways. Strong against strong is going to go sideways. What we're looking, of course, in any market is to pair a strong against a weak or a weak against a strong. That's when we're going to have our significant trends. This one, I think, is overdue for a correction down, and we'll be looking for an opportunity for that. Kiwi dollar also looking particularly weak and sideways, as the Kiwi weakened quite a lot last week. Not that you can tell from this chart, simply because the dollar weakened at the same time. I think the Kiwi play isn't done, however. I think we will be afforded an opportunity to trade it all the way back towards the top of the chart. Doesn't mean it's going to breach and keep going, but at least it's going to do another resistance test before all is said and done. So we'll be looking for that opportunity as well. And as long as it doesn't break the support, at the 0.71, that's the next level below where it's at, I think there's a good chance it's going to head up at some point. That's it for the dollar pairs. Aussie Canadian breaking bottom and keeps going, and now it's looking for the bottommost level of support. And if that breaches, then well, there is no floor. It could keep going for quite a bit. We may be talking 1,000 or more pips, so be on the lookout for that. Again, weak currency against strong. Euro Swiss has been steadily dropping, now following a new trend line that established all the way at the top and has been hitting consistently for at least 3 goes now. It is at a previous level of support that I haven't marked on the chart, but you can see it there, previous lows. And we're seeing if we get a trip towards the bottom of that rather wide wedge, or even the bottom of the chart. Euro pound going sideways now. It did try to make a recovery last week, aiming straight up for the past couple of weeks. Then Thursday into Friday, it faltered and started dropping again. Still too soon to tell what's going to happen. I think this one is overdue for a trip towards at least the middle of the chart, maybe higher. We'll see what happens. The EURJPY breaking the top, in fact, establishing a new high, a new valid high. So we've added that to the chart, and that is the new high to break at the 133.5. So we'll see how that evolves this coming week. The yen is still showing weakness. The euro is still showing strength. So this one may keep going for a while. EUROCAD, and this is one of those where I'm going to be contrarian. Of course, the chart is bearish. It's telling us to sell, but I don't think there's a lot more for this chart to give. I think that bottommost level of support will hold, and eventually we're going to have an opportunity to trade it back into that blue channel, perhaps even higher. So be on the lookout for that. We're not in the game of predicting, mind you. I'm not saying that's what's going to happen, but I think there's a higher likelihood than anything else. So you might as well keep an eye on it, looking for that opportunity, because we are talking in excess of 1,000 pips there to be had. Pound JPY also breaking the top on yen weakness, pound strength, and we'll have to see if it keeps going or not. Aussie JPY, I think, is overdue, as are most of the Aussie pairs, for a trip towards the bottom into Aussie weakness. The only problem here is the yen has also been particularly weak, so we're waiting for a break of that trend line. And indeed, I think we have a pending order in place to take us in short if it does breach. And that may be triggered at any time. It was within 20 pips of triggering as we closed out the market on Friday. Euro New Zealand, the Kiwi showing significant weakness this past week, and the euro showing strength. So you can see how that played out on this pair, weak against strong. However, it really took a breather Thursday and Friday, not moving much. So eagerly awaiting to see how this week kicks off. And if we get a chance to trade this one up or down, we are agnostic. We don't care about direction. We just care that the market's moving in that direction. Then we trade. Pound Canadian, another one I think is overdue for a trip up, mainly on more pound strength and CAD strength, though both of them are strong. Now, here's another instance of strong against strong, which means this one may go sideways for an extended period. But I think ultimately we're going to have at least a test of this trend line. So it should go up towards the trend line into the Ichimoku cloud. I don't know if you guys can see that on my chart. It's very light colored, but the cloud is here where I'm moving my mouse. This is the cloud here. So I would expect it to go up at some point to do a test of either the bottom of the cloud or the top of the cloud, which pretty much matches this trend line. That's if it doesn't go sideways. I don't think it's going to go down any further than, well, where it's already been. We'll see what happens. Pound Swiss going sideways now for more than a month, and we're waiting for a break either up or down. Right now, it's at the bottom of the Ichimoku cloud, which is acting as support. I suspect this one will go up easier than down, but we'll have to wait and see what happens. Pound Aussie, and of course, here we have the classic strong against weak, the pound gaining strength, the Aussie losing, which means that this one has taken a very brisk trip towards the top of the previous channel. It had a massive move a couple of weeks back, and it really hasn't slowed down. It's still moving nicely up. It's retracing as it moves up, but ultimately it's ending each day pretty much higher than the previous day, which is the textbook definition of an uptrend. And we are trading this one, and we'll continue trading it as long as it is producing. And that's it for our charts. Setups we see in progress. Of course, the pound pairs, the pound is still rising. So trade the pound long. If you're going to short the pound, be very careful how you do it. I'm not saying all of them will be going in one direction. There's probably a couple that may play the contrarian game. But ultimately, pound against dollar, for example, the pound is going to beat the crap out of the dollar. USD pairs, USD had a reasonably flat week, but the worst is yet to come, we suspect. We don't predict, we do suspect. The Australian dollar seems to be starting a significant and overdue correction. I harped on this fact quite a lot earlier in the presentation. I think the Australian dollar is at its limit of strength. There is only one direction now it can possibly go. I don't think it can go any stronger, any higher. So it may go flat for a while, but ultimately it will correct. The yen. The yen did not lose ground this week. Indeed, it actually gained. But what's next is the key question. The yen has been having a lot of trouble regaining any semblance of strength. So there's that. And we don't fight the market. We don't try to force the market into doing what we think it should be doing. We trade what's actually happening. So right now, the yen is in an extended and inexplicable period of weakness. And when that's going to end, your guess is as good as mine. And again, we're not here to guess, so we'll wait for the moves to start, and then we'll just hitch our wagons to that. And of course, the Canadian continues riding that oil boom for all it's worth. Yet another week of bullish movement for the CAD. When that ends, well, it'll probably end when oil weakens. I don't know when that will be. So long as that oil boom continues, the Canadian is probably going to continue moving into strength. Obviously, if we get good news out of Canada in their labor reports and their interest rate decision and all their other economic indicators, that's going to be helping the Canadian move stronger. And again, this is not about predicting what they're going to say. This is about making sure we're looking at the charts and trading in the right direction. That's it for our setups. As our parting words, and I do like to add some parting words, something in conclusion, a little bit of, I hesitate to call it wisdom. I don't think I'm any wiser than the next guy. I've just been around a lot. I've been around the block a few times. So expectations. Most of these notes I tack onto my presentations are based on personal experience, and that includes personal experience of other people. When people ask me questions, becomes part of my experience. So here's the thing about expectations. Your expectations in trading and in life in general, for me, trading and life are the same thing. I treat my life as if I were trading. I treat my trading as if it were my life. They truly have merged. They become one. It's a Zen thing. So your expectations are going to determine your success or failure. If you aim too high, you're going to set yourself up. You're going to crash and burn like Icarus flying too close to the sun. Aim too low, and why even bother? If, you have to have expectations that are slightly beyond your grasp. Otherwise, you're not going to be growing. So if you're aiming low, if you're aiming to make, $100 a year or whatever out of trading, well, anyone, a monkey throwing darts can do that. So, I mean, why are you bothering? And if you aim to just stay where you're at, you're going to get stuck in a groove for life. If I'm already making $50,000 a year trading, and mind you, I'm not saying I am or I'm not, but if I were making $50,000 a year trading, then I'm going to try to make more next year. I don't want to make the same $50,000. I think I can get better. But here's the thing, you can't be unreasonable. It's fine to aim high, but it has to be achievable. In my prior life, when I was a director of IT at New York Stock Exchange and Fannie Mae and all these other Fortune 500s, and I got paid insane amounts of money for basically warming a chair, these people in corporate, they love their acronyms. And one of them was SMART. SMART, and it referred to the goals. This was part of every year's exercise in setting up goals. SMART stood for specific, that's the S, measurable, achievable, relevant, and time-based. What does that mean? That when I have a goal, it has to be something specific. I can't just say, oh, I'm going to get better. Better at what? And how are you going to measure it? Then there comes the M. If I do plan on getting better, well, I'm going to get 20% better, 50% better, 100%. You have to be able to measure it. It has to be achievable. If I try to be 1,000% better next year, well, I'm going to fail. Even if it's specific, which it is, and it can be measured, I'm just not going to make it. So that is not a good goal. It has to be relevant. If I'm trying to improve my trading, I cannot say that I'm trying to, I don't know, improve my ability to play billiards. So it has nothing to do with my trading. It has to be relevant to whatever I'm trying to do. And it has to be time-based. There has to be some sort of time limit, or at least a point in time where I'm going to be measuring and benchmarking what I'm doing. I cannot say I'm going to get 20% better and leave it open-ended and hope to achieve that before I die. So SMART is actually one of the smart acronyms that are out there. Most of the bullshit I had to deal with when I was a director of this, that, and the other was indeed just bullshit. It was just manager speak, buzzwords that really meant nothing and achieved nothing for the business or for me as an individual. So I pretty much ignored them. But SMART was one I took to heart. And to this day, I said, I've been out of the corporate world for more than 5 years now. And to this day, I still refer back to SMART when I'm trying to set up my goals. So remember, expectations. The A in the middle of SMART, achievable, is key in trading. Aim too high, aim too low, you know, it has to be achievable. And so is the T. It has to be time-based. You have to put a limit on it. Usually my goals tend to be based around a year's worth of anything. I give myself a year to do something. Sometimes they're, you know, shorter time frame. I want to buy a property and I need to raise the funds to buy that property within 3 months. So that's my time base, 3 months. That's specific, it's measurable, it's achievable, it's relevant, and it's time-based. But my bigger goals, my strategic, I should say, goals are usually based in at least a year, sometimes 5 years out. So keep that in mind. Don't forget the A, and certainly don't forget the T. And the whole reason that this came to mind for this session is because I had somebody ask me via email whether they could make a significant amount of money off of trading a $1,000 account. Well, first of all, I don't know what's a significant amount of money for this guy who asked me. So, you know, I had to flip it around and say, I don't understand what you mean. For me, a significant amount of money is 300,000. For you, it might be 5,000. I don't know what you're talking about. And second, if you have $1,000, you're not going to make a whole lot of money off of $1,000 except through dumb luck. I mean, at best, you're going to double your money inside of a year. So you're going to have 100% gains. And that is at best. That's if you're doing everything right and you add a dash of luck into the equation. So it's not achievable. It certainly wasn't measurable because he's not giving me a dollar amount. It was time-based. He said in a year. and it wasn't specific again, because I don't know what the guy's measuring. So that made me refer him back to Smart and actually explain what that meant. And, you know, if he does reply, I'll continue talking to him. But if you have $1,000 and you want to trade it into $1 million, well, I'm sorry, guys, I cannot help you. That is not what I do. I can show you how to trade $1 million into $1,000 and lose 99% of it. That I can do, but I certainly can't do it the other way around. So there you go. And hopefully, you know, your 1,000 will turn into 2,000 and then into 4,000 in a year, and then another 8,000, 16,000, 32,000. If you double your money every year, well, sooner or later you're going to get somewhere, but it's going to take a long, long time. And I can't fix that. If all you got is $1,000, probably do something else to raise more funds and then come back to trading. Otherwise, it's just going to be a hobby. In other words, you're aiming too low, or you're aiming where you're at, and why bother? And that's it, folks. Thank you very much. Any comments or questions from anyone? Sorry I was so long-winded today. I had to get it off my chest. Nothing? Okay, tough crowd. Thank you, guys. We'll be back next weekend. For those of you who only follow this, I guess, a webcast. And for those of you who are subscribers, I will see you tomorrow for our first live trading session. Have a good one. Bye-bye.